It certainly has to do with inflation. It's hard not to look at this inflation, this 40-year high, and technically just looking at the chart of CPI for months now, it looks like it's going to at least 9, maybe even 10. So there could be some more inflation ahead. But as we're just talking about, some companies are weathering it well, some are not. And in terms of trading, it's the same thing. Some areas are not doing so well, others are. Commodities one way to hedge inflation. Let's bring in Christian Fromhertz, CEO of Tribeca Trade Group. And Christian, you are a trend trader, and so right now what's really catching your eye, one way to do well around this inflationary situation, commodities.
Yeah, great to be here, Abigail. Thanks. Another quiet day in the markets today, right? What we're seeing is, a couple months ago, it was just a lot of kind of thin participation in the market to the upside, where energy has really been kind of one of the trends that's been in focus, at least over the last month. But we've been starting to see other areas of the market really participate, particularly, agriculture, also some copper areas of the market. But when you look at overall commodities, and there's not a ton of ETFs out there that are just overall commodities, but you can look at one that's GUNR, and you can see that that's breaking out on a multi-year time frame, which has a combination of energy, agriculture, and a couple other areas of the commodities market too. And what I find interesting too is what's going on with copper and gold.
Yeah, copper and gold, because it's interesting. Year to date, gold is down just slightly, and those technicals on that chart really look poor. It looks as though gold could break down, but copper higher. And so you think this is a sign, the fact that copper is outperforming gold, that it may not necessarily be the ugliest inflation or stagflation picture, that the economy is actually doing okay?
Yeah, exactly. I mean, I think people really started to kind of think about that, the S word, stagflation, a month or two ago when we had a weaker job report and we heard about, the chances of interest rate hikes increasing. But when you look at what's going on with copper and when you look at what's going on with gold, it's actually hanging in there. And I actually think that that's a pretty bullish signal for the overall economy. If copper is moving higher versus gold, I think that's a good thing.
Well, speaking of another potentially bullish signal for the overall economy, Deere, the shares of Deere up sharply on the year. And of course, that's an indirect play on commodities. You also like it for an options play.
Yeah, I think that it sets up nicely here. And, if you look at the chart of Deere, you had a really nice trend for about a year and a half where it just went basically straight up. Over the last year, it's actually been going sideways. So we've got an earnings report coming up, but I think this group, the agriculture group, and it's a little bit of industrials in there too, but I think the Deere March 420 calls for about 650 makes sense to see if we can see a breakout of this, like we've seen some other companies like Nutrien and CF Holdings and Mosaic as well. So I think it fits really nicely in that theme.
Stay tuned. Christian Fromhertz of Tribeca Trade Group, thank you so much for your commentary on commodities, inflation, and a great trade idea there. Taylor, back to you.
Thank you, as always.